Well, for those of you who remember the Volkswagen episode of 2008, what I'm going to present here today will seem like deja vu. Back then, the German automaker briefly became the largest company in the world as a function of a massive short squeeze, right? It created countless legal battles afterwards. So let's get down to it, right? The company that I'm talking about today is a company called GameStop. It's a US-listed company, it's of US origin, and this is what the stock has been doing lately. It almost doubled last night, and it's up 860% in 2021 so far. Well, these kind of gains are uncommon, but they're not impossible. So why are we talking about GameStop here? Let me tell you why. A brief history. GameStop is a brick-and-mortar video game retailer. They sell video game hardware and software via physical stores. They've got 5,000 plus stores. The company was doing badly before the pandemic, and after the pandemic, it's been doing even worse because nobody wants to step into a physical store to buy video games. They do it on Amazon and other online channels. Now, naturally, many on Wall Street have taken the view that the stock will fall. It's a business which is a sunset business, and influential hedge funds like Citron are short the stock, so are many others. The numbers here actually tell you the story, both in terms of short interest and shares on loan versus float and outstanding shares. The numbers, the difference is just too large. Let's move on. So the pros are short. The professional investors are short. But the retail, as the title says, is long. Let me tell you. Back in August of 2019, a businessman called Ryan Cohen took a large position in the company. He basically said that the company can pivot to the online channel and start to turn around and do better. But what has happened this year is what is stunning. That is the real story. A lot of you would be familiar with the website called Reddit. Many of you would be users of Reddit as well. It's basically a news aggregation, web content rating, and discussion website. One of the subreddits on Reddit is called Wall Street Bets. There are millions of them, right? On Wall Street Bets, participants, members discuss stocks. This one has 2 million members. The founder of Wall Street Bets describes Wall Street Bets like this. He says they treat stock trading like a video game. They get a stock, they have fun with it, they make funny videos, pictures and whatnot, and that's about it, right? So GameStop was one of the stocks which was and is being furiously discussed on Wall Street Bets, right? And according to extensive reportage in US news media, that particular subreddit and the discussion there has been responsible for the huge retail buying activity in the stock. Basically, GameStop started as a meme, but it's been pushed to a completely different level now. Okay, so pros are short on one side, retail is long on the other side, and this right here now is the imbalance. Free float is 33 million, 70 million shares are shorted. There are 2 million live call options. US rules say that market makers who sell calls have to hedge by buying underlying shares. So 2 million shares equals to 200 million shares, right? So if the free float is only 33 million, then the call sellers, the market makers, are net short 166 million. And you add the net short position of 70 million, you get to a net short position, total net short position of 237 million shares. Just imagine that. 33 million shares are what is the free float, and net short is 237 million shares. So it's like a spring coil. Every time the stock goes up, call sellers need to buy shares to offset their calls, but they can't because there are only 33 million shares available. So the stock goes even higher. Call buyers buy even more shares. Shorts cover their positions because the price is going up. I mean, it's almost like an infinite loop. So that's right there is the story in terms of why the share has been springing up like the way it has been. The drama is still unfolding, and we don't know how this will end, right? It will end, but we don't know how. But there are a few lessons, and I think I want to put down 3 lessons for us right here in India from the GameStop story. First, small investor community is now organized and mobilized to act instantaneously. I mean, it's true in the US, it's true here as well. Second, this is an environment where flows matter more than fundamentals. It's been true for a while now. And number 3, and I think this is time-honored, an old lesson, when you see insanity in markets, don't go anywhere near it, and definitely don't try and short it.